Hello, welcome to another live stream and another episode of Daily Market Mastery with me, Rauchenwald. On this sunny Monday, I hope you all had a great start into the new week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using and that you see in this live stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and check out the Elliott Wave principle that you can read online for free when you use the link in the description down below. With all of that said, let's jump into my portfolio at Interactive Brokers. We have as usual, pretty much break even starting to the day this week with a slightly red tendency. Yeah, like should be the fitting word. And for this week, there are a few things that we have to consider. First of all, tomorrow is the election night in the US. So Donald Trump against Kamala Harris. I'm not rooting for Donald Trump, I can say that much. Which means there might be a reaction in the markets if it's not already priced in. Now, personally, although some of the polls, especially some of the betting polls, originally projected Trump as a slight favorite, I don't want to believe that in a second, because it's even hard to believe that there's still millions of people willing to vote for that buffoon. But I believe that Kamala Harris will win the election. We'll see if I'm right or wrong in the next couple of days. However, for all that matters for us is how it affects the markets. Now, for this week, other than the election, we also have our usual $30 GameStop covered calls. There was some upwards movement during the last week in GameStop that increased the premium. So at least we earned another almost $125 for the week in call premium. We obviously want to close out that position not as soon as possible, but basically we want to buy back those 5 for ideally $1 per option. So we're going to already create that order. It's going to take some time for that to happen, or it might not happen at all if GameStop rallies up. Either way, so if this week we finish above 30, then we would have our 500 out of our 510 shares in this portfolio called away. If we stay below 30, we just pocket the premium and we write new call options for next week. Now, it's still going to be 1.5 minutes before the markets officially open, and once that happens, we'll see the option premium rates or option prices, which will help us to figure out or to see how juicy the premiums are currently for GameStop. While we do that, we also have positions in Barnes & Noble Educational, Immersion costs, obviously GameStop, and our long calls for Grab and Novavax. So we are going to jump into Motive Wave and start our analysis. Now, Barnes & Noble Educational, so we usually do this alphabetically. And Barnes & Noble Educational, I don't think there's much to add. Our prediction, according to the notes, that doesn't track. So it's still a work in progress to work with my assistant to have her transcribe the predictions into the Google Sheet. So we have two potential scenarios here. Number one is that this is somehow an ABC corrective pattern before we go further down, in which case we would expect a profit target of 1419 to 1976. So actually the first profit target would be 1419 here. I'm going to update this right now. And number two would be that this is wave 1, wave 2 is finished here, and we're now getting a third wave, in which case the third wave target would be here. So based on the wave 1, our ideal in quotes third wave target would be 47 to 58. However, on a smaller scale, our third wave target would be based on this movement, assuming that when we're looking closer to an 8-hour chart, that this is basically a finished ABC corrective pattern where we entered here at 845. I mean, where the previous entry that wasn't that good, around 10 something here, slightly above the 38.2 retracement. But basically then based on this pattern, we had our entry at 845, and we assume that this is already wave 1. wave 2, and then from here we're going to get wave 3. Now we retraced a little bit more than 61.8% here, so it's possible, I'm not saying that it's likely, but it's possible that I'm proven wrong here, in which case I should ideally get out a little bit above 845 again. So yeah, like instead of securing the entire profit here, securing at least a little profit. Although our exposure in Barnes & Noble Education was also not that big, we hold an astonishing 30 shares right now. So even if I don't get out here, I still believe that this is a 5-wave impulse up, that even if the correction wouldn't be finished here, although it would be a perfect ABC pattern, even in that case, I wouldn't mind then just waiting it out until it finally finishes and go further up. That said, so what do we have to do here? Not much. I think right now would actually be a decent entry if we consider there would be 5% risk, because one could set the stop loss at 831, so roughly 5% risk with a potential huge reward, because even so yeah, so no matter which of the scenarios we consider, if this is wave 1, 2, and we're now in the third wave, we would get an ideal profit target of 400 to 500%. Whereas if this is an ABC pattern, so A, B, and C, we would still have a little bit more than or around 50% upside here. So risk-reward ratio is definitely good for an entry right now, which means actually we can increase our position a little bit. We have a couple dollars left. So first of all, let's close out our balances. So close out there we go, and transmit. So, and which means we have 60 euro roughly left right now, which means we can get another 60 euro. So let's get another 5 shares. I know it's not a lot, but it's something. So buy mid price, markets are open, and we're going to increase our position by 5 shares here. So up and then close out the balances again. So so with that, we basically used up some of our option premium that we earned last week to increase our Barnes & Noble educational position. It's not the best pattern on the chart that we looked at recently, but it's a solid pattern. While the beginning here is a little tricky to interpret, especially the move down here, which is why we have the option that this is just ABC and we're going further down. Overall, I believe that this here is a clear 5-wave impulse, followed by, as said, then the 3-wave corrective move, retracing to 61.8%, and we are now developing the next 5-wave impulse up. If I'm wrong here, then then the next stop loss would be in quotes at $6.05. So outside of this point here, where one would bet that this is indeed the finished correction, if one would in quotes bet that this is a 5-wave impulse and the correction might not be finished, the stop loss would need to be at 6.05. And if we go below that, then probably I'm indeed completely wrong, and we probably would then also break the low that we had back here. However, so while this means that today we potentially might not move at all, so like we can still move further sideways. Eventually, in the not so far future, we would expect an upwards movement. As for the specific prediction, I would therefore pick our lowest scenario, which would be 1420, and let's actually do it like this, and 1976 or 1977. So I'm going to update this myself on the chart for now. I'm not sure yet how we are going. I have to update my chart. For those of you who are wondering what I'm talking about, this table here, where I try to keep track of different predictions and when I first made them. However, it's challenging. I haven't decided yet how to best keep track of short-term and long-term predictions, because short-term could, for example, be expecting the correction here, while long-term would be that we then get another push up. I probably will have to switch to or revert to using multiple entries per stock, but then I also need to somehow highlight what of that or which of that are the short-term and what's the long-term forecast to avoid confusions. Anyway, we are moving on, and with that we are already moving to GameStop. And in GameStop, we have a 5-wave impulse up. We have basically we already retraced 61.8% here, but from the looks of it, while it's hard to label this mess, this looks like a 3-wave move, ABC, which means our assumption would right now be that we are having the following, that this here is wave A, down here, this here is wave B, and then we still would have to finish wave C, where we can see the minimum target would be at 21.58. So I wouldn't be surprised if we get to see 78.6% retracements here. Hi, Rai, great to have you here. Thanks for tuning in. Yeah, it's great that you're taking notes. So yeah, I'm already updating the sheet as we go a little bit if I notice something drastically wrong, and or not drastically wrong, but just that just doesn't check out right now. And yeah, yeah. So GameStop short term a little bit down, but I would not write that down as a prediction because, yeah, like we don't have a specific price value. So like, I mean, we could say 21.30 to 21.58, but we're already close to that. So that's not much of a prediction if it happens or it doesn't happen. On the bigger picture, we still have the issue of maybe an 8-hour chart works better, that basically we are not 100% sure if this marks the end of the corrective pattern or if this is just an ABC move before we have a further corrective wave down. Now, all of this here points towards the upwards direction, and our long-term outlook is still bullish. Yeah, so there we keep our old prediction of $30. So our long-term outlook is still bullish, but again, short-term, it's possible that basically this was not the bottom of this entire corrective move, but we still get a push further down. Yeah, long term, I have no doubt that we will cross the $30 mark, but again, that's just my opinion. Don't bet your house on it. But again, short term, it's possible that we see a little bit more retracements. I would be more confident once we cross the 25.24, so the high that we had here, because then this cannot be just a simple A, B, C corrective move. And it's more likely that we indeed finished our correction here, which will help us provide or generate further predictions for the upside that are a little bit more accurate, or at least a little bit more ambitious compared to just saying, okay, we likely will cross the high that we had here again. Yeah, so GameStop, we still have to wait for this week. We would obviously expect or hope for first a decline down to basically be able to buy back our options as cheap as possible. We can see that right now each call option is worth $14. So it still would need to drop for us to buy it back for $1 a piece. And then after that, we would actually need a push further up to get more option premium for writing options for next week. So GameStop stays, the GameStop prediction therefore stays at where it was, that we will long-term cross the $30 mark, nothing to adjust here. Moving on to Grab, our Grab prediction according to my sheet is 942 to 1088, which is based on the assumption that this here is wave 1, 2, or 2, maybe till here, and we're still getting a third wave. Now that is actually the long-term prediction. It's also possible, I covered it in one of the previous episodes, and I will, so right, please do not update that prediction. So Grab is fine the way it is on the chart for now. The other alternative would be that we have basically wave A, wave B, or wave B till here, and wave C. Now, if wave B finished here, we can see that we hit the minimum target for wave C, but even if wave B finished here, we already hit the minimum target, and we definitely have 5 waves up here. Now, with 5 waves up here finished, we definitely expect a correction down short term to 350, or so between 350 and 380. However, the long-term outlook is still bullish. The big question is just, will we actually get to see 1, 2, 3, 4, 5 long-term again? Or will we basically, or do we potentially already have our finished ABC pattern? Again, we have 5 waves up here finished already, followed by a decline from here. Thankfully, our exposure to Grab is an astonishing $50. So no matter how it plays out, we'll live with it, and our option only expires in January 26. So we still have quite a couple of weeks left for this to happen or not. So yeah, moving on. Yeah, so in the long run, we probably would want to update the prediction sheet here to also account for basically the option that this is only wave ABC. But again, right now we haven't decided how to do that. And yeah, I mean, I don't want to keep track of too many different predictions, because then I can just predict every direction and I will always be right with one of them. But in this case, there are simply 2 options on the chart. So we'll probably start to introducing alternative labeling. So basically having the regular analysis and an alternative one for each asset. I still have to think that through. So yeah. Then 1 second. Okay. Then moving on further. So next on the chart would be immersion. Immersion has shown some potential. We recently relabeled it, but got rid of a lot of the things that we had on the chart. Our 1 2 second 1 2 3 4, which means we would have a base channel, okay, that we right now don't have on the chart. What's missing here, or the important part that's missing here, was this expansion. Assuming that this is a 3-wave corrective move, that already showed that we're in the 100% area. Now, I mentioned it in previous episodes that from the look of this 1 2 3 4, it looks like we're missing a 5th wave, but because we made a new high here, that option is in quotes off the table. Doesn't mean that we are 100% out of the woods, but I think it's likely that we are finished with the correction. This is therefore, again, actually not a bad opportunity to enter, because one could set the stop loss here up at the low at 817. So again, it's less than 10% risk here. And if we indeed finish the correction here, the upside would be more than 50% as well over the next couple of weeks and months. As for the prediction that we noted, it was 670. No, I don't think that makes sense. So I don't think we have a 670 prediction here. Well, it may have been based on the bigger picture. We're going to have to circle out here. That would be here, the 61.8 retracement. That was an alternative labeling under the assumption that maybe this is only wave A, we still get a wave B, and then we get a wave C further down, which would then, depending on how it plays out, basically take us to this 61.8 retracement. That is assuming that we are correcting those entire 5 waves and not just those here, where we are right now at the 61.8 retracement. But then if we are, but then that would require here that we have, that checks out, yeah, so on the bigger picture, because then this is a diagonal with 1, 2, 3, 4, 5, and then basically we're retracing this. And so we're not just retracing this, but we're retracing that. We broke through the 38.2 retracement. I'm going to remove my prediction here for now for immersion. So, and we'll have a little bit of mixed signals, because on one hand, we have, as said, the expansion here that would point towards, okay, we should be towards the end of the correction, and the movement that we had here sideways combined with that high here would support an entry right now with basically, as said, a stop loss at 817. However, considering that we are potentially correcting, as said, the whole move, there we need what weekly, the whole pattern here, it's not, or we cannot fully rule out that we indeed will be getting a bigger A, B, C pattern that takes us down here, which would be then a 30% risk to get down here. And the stop loss technically would need to be here with a 50% risk, which is not such a great risk-reward ratio. In our case, that means we'll just keep our shares in immersion. We don't hold that many, as we can see, 50 shares at the moment. And we'll just sit this one or wait this one out to see if we can get a little bit more of a confirmation to the upside, or if we get a strong sign towards the downside. So either way, the long-term outlook, we're going to zoom out monthly chart. The long-term outlook of immersion would right now support 2 different theories. One is like, this is basically the bottom. We have wave 1, wave 2, and are about to get wave 3. And that would be a big wave 3. So basically a huge movement that's not on the chart right now. The other option would be that this is wave A, wave B, and wave C, where wave C already reached the minimum target. We should not ignore that fact here. And then from here, we basically are going further down. So I think the next, we're here on the monthly chart. Yeah, for the downside, basically, if we ever were to break the 460 low, yeah, is it 460? No, 423 low, then I would consider that a potential confirmation to the downside. So definitely that would be the point I personally would get out completely. To the upside, we should at least break the high that we had here at 1664 to have a distinct confirmation to the upside. Now, moving on, we're going to zoom in here again. So, but not 8 hours, but 12 hours, or at least daily in that case. Okay. Oh, moving on to Intel, where our prediction is, no, that one already came true, so shouldn't be on the chart anymore. We basically already hit our 2466 here. Actually, it's 64 is the predicted area. And with that, right now, we're in Intel in a waiting position. So that here goes off the table for Intel. There, the earnings basically hit both of our predictions. On one hand, the assumption that we have an ABC pattern downwards, and also here. So we hit that, and then after that, we hit the upwards prediction that was based on if we retrace 61.8%. So 2065, that we then would reach at least the 2467. Now we reached 2064, so here we were right within 1 cent, and here we were right also within, it went to 85, so within 20 cents, so with basically 1%. However, we didn't trade that because we didn't trade the earnings. And our funds are tied up in other positions, yeah, but since that is visually not super nice, we're waiting out for a little bit more data to see if we are indeed now in the next wave up or not. Yeah, technically, same thing like with other stocks. It could be that this is A, B, C, and that from here we're going further down, but we'll have to wait and see. Moving on to cost. Cost, we don't have a prediction on the chart right now because we're waiting to see if the low here holds and confirms that this is the end of a corrective wave or not. So we'll still have to wait a little bit to have that confirmation or not. Depending on if this breaks or not, we'll be able to make a prediction. So either we need a break to the upside of 879 or a break to the downside at 652 to be able to provide a forecast. And yeah, with that, we move on to NIO. NIO has no forecast right now on the chart because here we are additionally waiting to either have the confirmation that this is the finished retracement. We got out here by predicting basically wave 3, 4, 5. And now the question is, did we indeed already finish the corrective pattern, which would be possible. However, this is hard to see as a clear three-wave move. So it's also possible that this is only the first part of the correction, second part not even finished yet, and then we get the third part of the correction. We can see that this way, if that would be wave B, we would have a minimum target for wave C at 470. So we're going to have to wait to either have a little bit more upward movement here to have some kind of confirmation that indeed the correction is finished here, or for a break to the bottom at 496. to have the confirmation that this is only the first part of the corrective pattern. However, NIO, in my opinion, long-term should then also either turn into A, B, so B potentially here, so A, B, C, or A, B, C, or 1, 2, 3, 4, 5. Yeah, so we basically just have to be patient a little bit to wait out, to get a few more candles on the chart. Within the next couple of weeks, or worst case by the end of the year, we should have a clearer picture that points or confirms where we have our turnaround point and provides us with a potential entry into NIO as well. So for now, we don't have any predictions for NIO. In Novavax, where we have our calls that expire in January, we are still waiting to see if our correction now finished here. We unfortunately only got it partially right, so we entered here and bought some calls that expire in January and assumed that this is ABC for finishing wave 4. However, we got proven wrong here when that price level fell. Now, visually, I already mentioned it during the last couple of streams, we assume that this will be 1, 2, 3, 4, 5, so that we still get another push a little bit further down, potentially to hit the 61.8 retracement at $8.08, which would be a relatively decent entry point. However, stop loss would need to be down here at 381, which is more than 50% risk. Therefore, we are just going to hold our calls. Oh, sorry for that. Because it's also possible that we already finished wave 4 now here, and then this would be wave 1, 2, and 3 upwards. If we break the low that we now had here, there's also no point anymore to get out of the call. So we just have a $250 risk here and might book a $250 loss on that trade. And we could then just hope that basically after we finish that push down, it then finishes A, B, C. Basically, we can also check where our potential targets here, if that's a bigger pattern, so we can see, yeah, like anywhere between 808 and 743. So we could just hope that this 1, 2, 3, 4, 5, if it still is developing, finishes by the middle of November, and that then during December we actually get strong enough movements to either close out our calls, maybe break even, maybe with a slight profit, or for them to still finish at a profit. Considering that we wrote or sold bought $20 calls, I haven't lost all hope, but I think it's unlikely that we'll see this happen in time, which is going to be a pity. But on the other hand, it should also allow us to basically then, especially down here, if this were to happen, buy other calls, so with a further expiration date for a lower strike price. Now, moving on to NVIDIA. NVIDIA is up today 1-something%. We are basically here waiting. Do we have that written down? So no prediction for Novavax, or one prediction short-term 808. NVIDIA has prediction 150.79 to 162.70. So here we just wait. If we zoom in, we can potentially already see, but we set the vertical spacing. Hello, let's try this again. Okay, it doesn't do much, but we can already with the naked eye potentially see 1, 2, 3, 4, 5. So there should be a little bit push up, and ideally that's going to be the first wave, second wave, third wave, fourth wave, fifth wave that takes us into that area. Hard to say when it will happen, but I would estimate that by the end of November, we should be in the area of 150 to 162. The only other alternative would be this is 1, 2, 3, maybe 4, 5. So if we break this here to the downside, I'll have to switch to a bearish approach. Considering that around 64% of NVIDIA's quarterly earnings are account receivables, which means purchases from their customers that haven't paid yet. And one of their, I think their third biggest client or customer is SMCI, which just is dropping further due to a huge accounting scandal, or I mean, not huge, their auditor dropped them, but before that there was a independent investigations by Hindenburg Research that pointed towards an accounting schedule. There is a little bit more risk with NVIDIA, other than that it's anyway hugely overvalued in my opinion. But there is the added risk that some of their customers, potentially, especially SMCI, won't pay their bills, which would then mean that NVIDIA would have to write off a potential huge chunk of their quarterly revenue. And that would potentially then trigger a sell-off and like reasonably big correction with NVIDIA. But for now, we are staying with the bullish labeling and the forecast of 150.79, 162.70. Moving on to SMCI, where our prediction is actually the 1838 to 568. So based on 1, 2, 3, actually here we now hit our wave 3. So 1, 2, 3, 4, 5. Although we might not be fully finished here, so it might be that we get a little bit of correction and another push down, but a turnaround at the 2618 level here would point or serve as confirmation for 1, 2, 3, a little bit of recovery, and then 5 takes us down to potentially at least, I mean, we can, can be a little bit more accurate here. So if this is the end of wave 3, we'll have to see how high we go here, but we can already see that we then would expect with the next push to go at least here or here. Again, our prediction here is 1838 to 568. 1838 would be the 38.2 retracement, 568 the 61.8 retracement. I have to say, while it seems like a huge and big correction. Looking at all of this, I think this is 1, 2, 3, 3 again, maybe not even finished yet. 4 and then 5 would already break the 1838. Then we would get another corrective move to the top and then another 5 waves down. So I really think that a sub $10 price here is possible. We're gonna have to check SMCI. Probably premiums are now pricey. I don't even have it listed here, do I? Okay, let's edit here. So SMCI. Yeah, or let's actually 1 second fire up option strat up. And then let's say 568 up. Optimize SMCI 568. Not, yeah, 5.68, yeah, 5.68. And let's see if we say, what's the longest we can go here? That's not bad. So if we sell the $28 call, we pocket the premium, but however, to the upside. Hi Akashi, great to have you here. However, the problem is that our risk to the upside is infinite here, yeah. So that's kind of like tricky-ish. Especially right now, SMCI is under 28, and we would make more. So right now, if there is a recovery for wave 4, then we would get more or have a better deal selling than the $35 call here. But the question is, yeah, do we want that risk? So I definitely don't want to have a trade that theoretically has an unlimited risk if I'm wrong and the stock goes up. Now, if we move closer, let's say January 26, yeah, the best we could do is 100% profit for basically a little bit over a year. And that would be if it goes broke, basically. So if we, or not goes broke, yeah. So if it hits our target price and below that, we would have more potential, yeah. Although the 1750 put would have the advantage that I really expect that we will see this level here fall. But we don't have the collateral right now. I mean, we could make the trade, but it's not really that nice. And if we move closer, if I say by January already, that definitely will not happen. And the risk reward is also not that great. And because short term, there could be a set of wave 4 already happening. Then we get it, which potentially might even take us here. Then wave 5 takes us down here, and that all has to develop. We're looking at a 3-day chart, so like we're easily already in the middle of 24 to reach this level here. Then we get a correction up there, and then we get the push down. So right now it seems like it wouldn't make much sense to make the trade, yeah. But again, our prediction stays the same, so 1838 to 568 long term. And with that, we actually can move on as well, and we jump into SPY. I know I said I want to make the time to provide a better analysis. For SPY, actually, we right now still have our downwards labeling. So our projection is 566.96. Is this correct? 566.96 would be the 38.2 retracement, yeah, which is the overlap. So we have on one hand the 161.8 expansion level for ABC. On the other hand, it's wave 4 of the previous impulse wave of a lower degree. It's also the 38.2 retracement. And in this wave C, where we assume that we have 1, 2, 3, 4, so 4 finishes here, potentially 5, there we would see that it's also the minimum target, 566.47. So basically our target would be 566.47 in this case. Because we have so many different aspects that point towards this target. Now, it's also possible that we are going down 1, 2, 3, 4, 5, in which case we would go even further. But for now, we would have, what's that, like basically 10% more, no, 1% more downside, so 570. to this area at least. So, and the question is if it would happen now or if it will happen later. The only alternative would be that this corrective wave up isn't finished yet, but turns into A, B, C. But then we should go further down. So for options, it's a little bit bad right now because we don't know how fast we'll get there. And I mean, we can select check 566.47. So in SPY 566.47, and if we even here, that's not too bad. So even with a January expiration date, now how would that perform? It happens earlier. So just to clarify that, so if we 566. Oh, not that well. So we would need to drop a lot more to, so that's not the right thing here for us, okay? And if we go closer, so here we are looking at 8-hour chart. So we'd actually expect this, even if we get a wave C up and then a wave up, we actually expect this to happen by the, maybe even by the 11th. So let's check what our options would be there. So if we say 11th of November, not that great, so 160%. It's not the risk-reward ratio that we would like to have here. So because when with this, we have to be right, I don't know, every third time at least. So there is no point. I mean, there might be a point, but if we take it closer, obviously we might get better plays, yeah, but yeah, for tomorrow, but that's very, very highly unlikely. So, and if we move further out, it just changes the equation. And here we have the problem that the profit along the way, so with a call broken wing, we basically have the problem that the profit along the way is too low if we are right, and if we are right early in quotes. So it's only pays well if we are right at the exact date. So that's not a play we want to make. So yeah, no trade here. Now, however, last on the list for today, we have our NASDAQ. And here it's quite interesting because we bounced very nicely at the 361.8 extension level. Our forecast for the NASDAQ is 19,730.61, which is down here. However, looking at this, I think we'll actually see a bigger decline because what we right now have is wave 1, 2, 3, 4 might not even be finished here. So on one hand, so I said 4 might not even be finished here, which means this is actually a short-term target here. We would expect if 4 hasn't finished, then we're looking at this, A, B, C, which means we would get a little bit upside. So of, what are we here, 99, so of 250 points up, maybe a little more. So because that move here could be up, adjusted the wrong one, wanted to adjust this one. So we could go up potentially as high as 20,317 if this wave 4 isn't, or if this is not a wave 4 that's finished. If it's already finished, then we would basically expect to go down to yeah, like at least 19,740, so another 150 points to just finish this first wave, which would fit with the 38.2 retracement. However, it should not be the end of the corrective pattern because we should potentially be correcting yeah, further then, even though it marks the area of wave 4 of the previous impulse wave of a lower degree. From the looks of it, this correction is not finished. And again, we would expect to, again, that we have the right one. So 61.8 to go down at least here, and that would then only mark wave A. Then we get a short recovery for wave B, and then we get another wave C down. So I actually would expect that our retracement target here would be around 19,200 in this case. So the 61 a secondary, which would be a set 19,211.87. And yeah, so NASDAQ looks like it's going down for a little bit before it potentially goes up again. And with that, we have everything covered. Now, yeah, I'm still working on, in quotes, restructuring the stream a little bit. I would like to cover earnings. So because obviously earnings, while they often have the expected move already priced in, they are also the situation where we might see substantial moves in individual stocks. So I'm gonna look or pick an earnings calendar that tells us who reports their earnings today after market close and tomorrow before market open. And this way we can then in our stream look at the current investments, but also look at potential option plays with very, very short time to expiration to basically just trade earnings specifically. So if we're able to see a pattern that would indicate the start or progress of the impulsive or corrective wave, we could then use option strat to determine what would be the most profitable option to take. And then, in quotes, bet small amounts on our short-term labeling here. It has the benefit that we don't have to consider the overall bigger picture labeling as much. The trades are not that long-term, and depending on the option plays, the risk-reward ratio overall might be good enough so that we don't even have to be right half of the time. But again, that's just something I want to do. Still have to clarify or figure out how to best keep track of different predictions, so short-term, long-term. Yeah, but for now, so that's it. Thank you for tuning in. Akashi, thanks for stopping by. Rai, thanks for watching. Please update the forecast table accordingly. Check if I missed something, because most of the things I think are updated already. And yeah, then I wish everyone a pleasant rest of the day, and then see you all tomorrow again around 5 minutes before market opens. For another episode of Daily Market Mastery. However, tomorrow we're only going to have a relatively short stream because, yeah, I have other plans already in the schedule at around this time. So, but yeah, thanks for stopping by. Have a great day, and then see you in one of my future episodes of Daily Market Mastery. Till then, bye-bye.